Hello, everyone. Hope all of you are having a great time. We're going to go ahead and dive right into our topic. So, what if I told you that a method you probably learned, or at least should have learned, in the middle school years can actually make you a better stock trader? The worldly known method, aka the Fibonacci Retracement, is a math sequence that states that the sum of the first two digits is equal to the third digit, right? So if you have 1, 2, the sum of those, meaning that you add both of those numbers, is equal to the third number, which should be 3. That's not the important part. The idea behind this method when it comes to stock trading is to play the overvaluing and undervaluing of a stock. In simple terms, it's a method to play reversals on a stock. When a stock experiences massive sell-offs or buy-offs, the stock will either reach massive levels of undervaluing or overvaluing. Many traders like to take this as an opportunity to either buy the dip to make profit or sell the highs to lock in profits. So I'm going to go ahead and show you the conditions that I've developed for this method. And they're very simple conditions. The first condition that we look for when doing this method or applying this method is that there must be a clear trend that's consistent with reversals or a massive spike, and I'll show you how those look like. The second condition, the swing high and the swing low must have enough space for you to profit off of. The third is that we require a sign of reversal after it passes the 23.6% of the FIB. And the last thing, we want to only use this on blue chip stocks and not any penny stocks or random stocks that do not have a lot of liquidity. So let's go ahead and apply. All you have to do is you go ahead, click draw, and then you click Fibonacci retracement, not extension or time zone, retracement. And what you do is you try to look for a stock that's undervalued at the moment. So we can see that beyond here, it dropped from a high of 152 to a low of 135, which is a large drop. That fits our criteria. The first thing we said is that the stock must have consistent trend with reversals. It would be best, or massive spikes. So we can see from the looks of it, beyond is not so much of a consistent reversal. It has a consistent trend to the downside, but there's not much reversals going on. But we do see something that we like, massive spikes. So you can see there's a major sell-off, little reversal here, another major sell-off. We like that. That's the best thing we like to do. So condition 1, check. Condition 2, we said that there must be enough space for us to profit off of. So with beyond, when trading options, $4 to $6, $4 to $8 is a nice move for us to profit off of. So can we get that? 152 to 135? We can. That's more than a $20 drop to the downside. So the space between them is enough for us to profit off of. So check. Now, what do all these lines even mean? In simple terms, they're basic or common support and resistance levels for predicting the future. So we don't know where the chart will go after this. These blue lines that are showing right now will give you an indication of where the stock will experience some sort of resistance or will have some sort of support in the future. Now, people say, well, how do I know where the low of the stock is? All you have to do is you keep extending the line until the reversal occurs. Where is the reversal occurring? It is any time it breaks past the 23.6% of the FIB. So we can see if we started having the swing high there and the swing low here, which is the all-time low, we can see that the stock actually got rejected at the 23.6 and then continued down. All you have to do when you try to play these methods is you keep extending it until the stock breaks above 23.6. And then we know that this is the lowest the stock will go. So right here would have been our entry at 23.6%, which is at 139.92. And if you paid attention to the invisible session, we know that we don't enter exactly at 139.92. So we're going to wait for the 140.03, and that's our entry. And then you can play it to the reversal side all the way to however long it reaches. Just keep in mind that use these upcoming support and resistance levels to give you indications that if the stock is struggling to break one of these resistance and support levels, then you should exit. The way you should set your stop losses on a method like this is I usually like to have my stop losses large at the start to give me space. As the stock can break it and come down, right, then it can continue. So I like to give myself space and have this as my stop loss at the start. And having that kind of large gap at the stop loss, you need to also make sure that it's possible for you to make that much profit to have a good risk to reward ratio. So we're willing to risk $3 or $4, so we need at least the stock to go to 144 plus. That's what we're looking for. Then you just keep updating your stop loss. As soon as the stock breaks the 50% level, many of the stocks will tend to struggle after that and will either end up flat or come down again. So anything above the 50%, I would start to use the half box as my stop loss, meaning that I will not use these support anymore. So I would actually update my stop loss to here, to the middle of 145.18 instead of having my stop loss at the 50%. And if it breaks this level again, I would have my stop loss here. And then you would continue to do that as the stock continues up to try to ride it out as much as possible. But you can see in this kind of case, you would have got kicked out at the 61.8%. But you still made more than enough profit of what you asked for. So that is the Fibonacci retracement. And those are the conditions that we look for. And I hope all of you have a good